You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Bupp here with episode number 154 of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is real estate expert and recovering institutional investor, Jared Rogers. And today's show with Jared is going to be somewhat unconventional in that, unlike most new investors who get started in smaller investments like residential or small multifamily before working their way up into larger commercial multifamily properties, Jared took the complete opposite path by first cutting his teeth on larger institutional grade investments before somewhat downsizing into the smaller investments that he's involved in today. And he's going to help you better understand why bigger isn't always better, okay? And here's what you're going to learn in the show with Jared today. You're going to learn how he got its start in the finance side of the commercial real estate business before transitioning into the role of being a full-time real estate investor. He's going to share with you the reasons why he went from large industrial turnaround investments to focusing on smaller residential and commercial investments. You're going to learn about the challenges of dealing with institutional equity and why Jared prefers to steer clear of this type of capital to finance his deals. You're going to learn about the average time frame that it takes to realize a turnaround strategy on a large industrial property of 150,000 square feet or larger. He's going to tell you about the preferred ratio of office space to warehouse space when dealing with flex space type of investments. You'll learn about the importance of creating a life-work balance and the necessary shifts Jared has made to always make this his number one priority. You're going to learn about the power of technology and the effect it's having on how the real estate game is being played, from lead flow to property management, and why you need to stay ahead of that curve. You're going to learn about the importance of always striving to create win-win deals and maintaining your integrity in all that you do. And you're also going to learn why you should never get fixated on the number of properties that you own or the size of your portfolio, but rather how profitable they are and their ability to buy you the lifestyle that you desire, and much, much more. Hey guys, if this is the first time you're joining in here for the show, I want to welcome you to our incredible family that we have here at the Real Estate Investing for Cash Flow podcast. Or if you're one of the many thousands that join in each and every week, I want to welcome you back and let you all know how grateful I am that you join me each and every week, okay? Thank you for being here with me. And before we get on to the show with Jared, I'd like to briefly run through a few updates with you guys. If you've been listening in, then you know that we've got some big things happening here at Sunrise Capital Investors. That is our investment company, and we've got some big goals that we're trying to reach over the next couple of years. In fact, the next 5 years, it's a 5-year goal. We are in the mobile home park space. We own and operate mobile home communities in the eastern half of the U.S. I think today we're in 8 different states, soon to be 10 states, and we're growing very, very quickly. And I'm telling you all this is because we can't do that alone. We cannot grow and reach our goals by ourselves. We are a growing organization, and we're looking for people that have an interest in this niche, in the mobile home park niche, and have an interest in working alongside an experienced team with a track record like ourselves. Okay, so we have an apprenticeship program that we are coming out with. We're rolling it out here very shortly. I want you guys to stay tuned, because if this is something that you might have an interest in, you want to work with a team of winners, work right next and rub elbows with us that are making deals happen, and you think you might have an interest in the mobile home park space and working alongside us there to help us reach our goals, then we want to talk to you, okay? So pay attention over the coming weeks. I will have more information to learn how you can actually apply for our apprenticeship program to where you'll be working side by side with us here in Clearwater, Florida, okay? Our goal in the next 5 years, we would like to have 10,000 mobile home park lots under ownership. Today we have just over 1,000, so we need to add 9,000 lots in the next 5 years? Yeah, a little bit less than 5 years now since we made this goal. So we'd love to have you help us get there, okay? So pay attention over the next coming weeks. I'll have more information on how you can apply to our apprenticeship program. Next, guys, if you haven't heard already, Charles and myself, we're writing a book on mobile home park investing, and it's coming up here in the next couple of months here. It'll be finished, but I'm telling you all this because we are literally, we're putting together a priority list, a VIP list for those that tune into the show that want to get a free copy of this before it goes for sale on Amazon. If you have an interest in getting a copy of this book, literally, you'll be the first one to get it when it's completed. All you have to do is text the word Kevin, my name, Kevin, to 41411, and we will send you a copy as soon as it's completed. Absolutely free of charge, okay? Again, text the word Kevin to 41411, and you'll get a free copy of our book as soon as it's completed. And I can promise you, it will be the most comprehensive book on mobile home park investing that you've ever read, okay? Next up, guys, if you are an accredited investor, then you've listened to this show, then you've probably heard me mention about the partnership opportunity that we have with Sunrise Capital Investors, again, our investment company. We're looking for those who have an interest in this niche, mobile home park niche, and also who have an interest in getting a higher than average return on their money, okay? So if you have an interest in learning about our partnership opportunity, working with us and Sunrise Capital Investors, you can go to sunrisecapitalinvestors.com. You can download our investment prospectus and get more information about our company, what it is we do, and see if it might be a good fit for you, okay? And then lastly, guys, if you happen to be in the Tampa Bay area for whatever reason, work, pleasure, anything else, and you have some extra time, that's where we're based out of, and we'd love to meet you. So I'd love to meet you. You know, I myself and my team, we love meeting others that share the same passion for real estate as we do. And I'd love to buy you coffee, beer, lunch, dinner, whatever you have time for. Shoot me an email, kevin@kevinbupp.com. That's my personal email address. And let me know when you're coming into town, and we will do our best to coordinate our schedules and get together. Okay, guys? So without further ado, guys, let's get on to what you've been waiting for, which is our interview with Jared. So here we go. Ladies and gentlemen, today on the show, we are thrilled to be joined by real estate investment expert Jared Rogers. Jared has been involved in commercial real estate since 1997, starting as a finance broker where he was involved in more than $3 billion in commercial property transactions. Then, starting in 2007, he moved into the operational side of the business where he became an operating partner of 1.4 million square feet of industrial properties located throughout North Carolina. In addition to his commercial activities, he has flipped numerous residential properties, assigned contracts, and also has acquired some small commercial properties. So without further ado, I'd like to welcome Jared Rogers to the show. Jared, how you doing today?
Good. Thanks, Kevin. Thanks for having me.
Yeah, thanks for joining us. And just to give our listeners a sense of geography, where are we calling you at today? Where are you based out of?
Winston-Salem, North Carolina. The area is known as the Triad.
Yep. Okay. I love that area. As I had mentioned, we actually own some properties up in North Carolina, so I spend quite a lot of time up there, and I like the Winston market. It's a really good, stable market. So what I'd like to do here in the beginning of the show, Jared, is I'd like to kind of throw the microphone back in your lap for a few minutes. And I gave you that very brief introduction, but I know that it's a lot more expansive than what I just mentioned there. And so if you could just maybe take a few minutes, tell our listeners a little bit more about yourself and just really how you got involved in this industry.
Appreciate it. Yeah, sure, we'll do. So I got started in 97, kind of actually right before I got out of school. I started as an intern that morphed into a full-time job. I got into it because my dad was into it, so it was more of a nepotism kind of thing, and started just financing deals. So what most people were I was financing mobile home parks, self-storage facilities, you name it, I was financing it. And then worked my way up to a different company where I was literally just raising money for developers, some of the largest in the country, all the way to entrepreneurial developers. So I raised $3 million to buy one building, and I raised $150 million to buy portfolios. So that was what I spent a bulk of my time all the way to 2006. And then I had kind of a life-changing moment, wanted to move to Southeast where I had a better quality of life, sold my house in California. Fortunately, I sold it right before the bottom dropped out. And moved to North Carolina, where I knew one person, my brother, and decided to start over again. I got approached by 3 different clients who wanted to expand their portfolio out of the Western markets because it was tough to find yield. And elected to go with one group, and we would buy small industrial kind of business park properties. So we bought, 2007, we bought our first property. It was 167,000 feet. We expanded with another portfolio, which was for about $49 million. We added that portfolio a couple years after that, and then we bought a large kind of big box industrial property in Greensboro that was another 864,000 feet. And most of the stuff we were buying was always value add. There was always something to do. It was not coupon clipping, so they were heavy intensive turnaround plays. Mm-hmm. And now after that, when we did a huge intensive job on Greensboro, took a lot of time, drove some real value. I elected to kind of step back again. Part of it was because my life dictated it. I had some family issues going on that required me to do it, and I had the freedom to do it, so I did it. And I said, I'm going to go off on my own. So I've gone off my own in more of the the Triad region at this point. And that's really been the last kind of 18 months of buying, selling property, some residential, quadplexes, small commercial, anything I can get my hands on. Well, as I said before, what I like about it is I have less people to answer to. I answer to myself. I do have some investors, but I don't have the 800-pound gorilla of GE Capital calling me. I don't have institutional money partners. I don't have their investors calling me, like Harvard Endowment coming into town saying, can we tour? So I don't have any of that stuff. I make the decisions. I live by the decisions, and I move on.
Mm-hmm. Okay. Well, it's kind of it's a unique transition because normally it's the opposite direction. A lot of people get into this business doing smaller type properties with the hopes and the dreams that they move into bigger type plays like you had just discussed there, the larger portfolio type deals, dealing with institutional investors and such. But tell me about some of obviously there's some pros and cons of both doing it on your own, dealing on a small scale versus this big scale. And you had mentioned you don't have big 800-pound gorillas like GE Capital or institutional investors breathing down your neck. What are some of the differences, just so we can better understand, what are some of the differences between raising capital through some of these large institutional investors versus just raising capital through, like high net worth individuals like accredited investors? What are some of the differences there?
Well, I think the large difference is there's two large differences. One, it can be easy to go to the institutions because they have, they've all raised millions and millions of dollars in these funds, and after they sell out of one, they raise another. So it can be easy to get to. It's just hard money a lot of times. It's not hard money in terms of rates, but it's hard money. There's a lot of process. There's a lot of dating that goes on to get to it. And then really what I found most dissatisfying about the whole process was you're not necessarily on the same table when you have to make critical decisions. So, when the economy turns and you need to double down and blend and extend, time heals all wounds kind of things, a lot of times your money partners are on the direct opposite side of the table. They got investors who are doing redemptions. They need to raise cash flow, and the only way to raise cash flow is to sell assets. So it could be I lost more money I lost more potential money because of decisions made by institutional equity because it benefited them, but it was not in the best interest of the property, and it was definitely not in my best interest.
Interesting.
So that was where I was struggled with it. I've had some very good experiences. My clients had very good experiences, but I think it's kind of like the same thing. If it's rising tide, everything's going well, then everybody's on the same page. The issue is when you have that blip, are you really on the same page from an asset perspective? Is it an evergreen fund where they can blend and extend, or has it reached its horizon where they have to sell? Can they help you with more capital if you have a capital call to refinance because you have term default coming up? Some can't. So you really need to. For me, you really need to know that you have a very flexible money partner, and institution guys just are not. By nature, they can't be that flexible.
Sure. Okay, that makes sense.
To me, that was probably the biggest issue.
Okay, so talk to me about some of the investments that you guys got involved. I know you said everything was pretty much intensive value add type plays. Give me a normal scenario with one of your industrial acquisitions. What was the value add component of it, and how quickly could you guys realize when you go in and buy a 168,000 square foot industrial park? There's obviously numerous tenants there, and that's divided up into numerous different spaces, but give me an idea of what the value add component is, and then how long it really took you guys to realize, that improvement.
So that was the smallest one. That was 9 buildings. I want to say the average tenant size was about 2,500 feet. So we had about 70 suites in that property. Excellent location, great visibility on a freeway, all the things going for it. But the big value add component of those things is if the economy is really blowing and going, see office is the way those kind of business parks morph because they get pulled up and that's where they get the most money. But in the average economy, that park really should be 25 to 50% warehouse and the rest office. But what happens is when the economy starts taking off, people start adding office because the office rents are higher than industrial rates. But when the economy changes, then you can't get, you won't find anyone to fill the space. So on that value add, the biggest component of that value add was there's a lot of deferred maintenance. HVACs, roofs, all that kind of stuff. So we were probably $2 million in deferred maintenance. And the other component was really addition by subtraction. So a lot of times we'll come to a property. I'd come to a property and go, "What's the addition by subtraction?" In this case, it was taking out a lot of bad office that made the spaces kind of unleasable in a underperforming economy or a normal economy. So if you go back to more of an industrial use on something like it, you'll get a different buyer profile. But what happens is it kind of goes from an office park to really an apartment building without the kids or the pool. And those are my favorite properties.
Gotcha. So you convert that more into like a flex space? I mean, where there's like portion of warehouse behind each office? Okay. But
at least you want at least 50%. If you do anything more than that, then you're still trending towards more C office with storage.
Gotcha. And so I want to talk about today then. So you've transitioned out of those big partnerships and you decided to take your own path. Tell me about why you decided to go the route of smaller type properties. I know you're doing residential and small commercial. I mean, why not transition to maybe not 200,000 square foot industrial complex, but maybe 50,000 square foot or maybe multifamily or some sort? And why didn't you go the route of doing that and raising capital, compared to what you're doing now?
Well, the main decision was I wanted to have the flexibility to do what I want to do, and for as long as I want to do it. So when I bought an asset, I always looked at it from the long haul. I want to be able to own it forever.
Okay.
So as you move up those chains, you don't have that flexibility.
Yep.
That someone else is making that call. So I want to be able to do that. I want to be able to, the triad in the southeast, the quality of life is very good. You don't need to conquer the world to be able to support a good lifestyle.
That's true.
So I looked at that. How can I get myself where I could own property that would support my lifestyle? And so you're looking at cash flow, you're looking at, building some equity. But I quickly, as I mentioned before, transitioned out of the cash flow part of operating single family houses. And so most of the stuff we look to own long term, what we do is we do quadplexes, small commercial. And then the other thing we'll do is we'll take a house we bought for cash and we'll turn around and sell that with owner financing. So to the kind of the Hispanic community or people who can't qualify for credit necessarily today. So it operates like I get long-term cash flow because I'll structure it as a 10 or 15-year deal, but I don't get the calls. You can't call me about the termites. You can't call me about the water leak. You can't call me about all that stuff, which is the negative side of owning single-family residential is you can get 4 phone calls from 4 different houses every single day.
Yep, absolutely. Yeah, so how are you guys handling your management? I mean, you have a lot of these rentals, even like the quadplexes and things of that nature. I mean, you guys handling all that management internally, or do you actually outsource it to a third-party management company?
We third-party everything that we've done recently, so it just frees us up to do more transactions.
Okay. And I know that we had discussed this before we got onto the recording here, but I was asking how you find your opportunities nowadays, and a lot of you had mentioned that you bought into the WeBuyHouses.com. You bought a couple different markets there, and so is that even where you're finding like your quadplexes? I mean, is that where they're coming through that lead source, or do you actually do some of your own direct marketing as well? Yeah,
I'm doing much more of the commercial is definitely coming from what's on the market, what's been sitting on the market, and just from relationships I have with the brokerage teams out in the area. Most of the single family lead comes from the We Buy Houses and spending money on that brand and continuing to market that way.
Mm-hmm. Do you see any shifts happening in that marketplace that you're in right now with regards to even like the fix and flips? I mean, are they sitting on the market longer now? Or is there less inventory than what there was a year ago? I mean, what kind of changes do you see occurring?
In our market, fully renovated stuff is going on. The last 5 houses we've renovated, we've had under contract inside 48 hours. So
oh my gosh!
So they're not staying long.
Yeah,
and that's if they're in that affordable price point.
And what's affordable there? Like $100,000 and under, or
1 to 2, under 200? Okay, really is kind of affordable.
$200,000 gets you a pretty good. I mean, that gets you a good amount of house up there, doesn't it? I mean, what are we talking? Probably over 2,000 square feet. 200,000. In that price point?
Yeah, 200,000. You'll be fully renovated. You'll sell anywhere from 80 to 125 a foot, depending on the submarket you're in.
Mm-hmm. Yeah, good deal. Yeah, I've noticed that in that market up there. I mean, you get a lot. I mean, in comparison to where you're from, you get a lot of house for your money.
Oh no, I sold my house in California for $811,000. It was 7,700 square feet. So yeah, that was a much different market.
Yeah, right.
Yeah.
Good deal. So tell me about what you foresee the next 5 or 10 years in your business. I mean, what are your goals now? I mean, I know that you brought it back to a smaller scale so that it could be much more manageable for you, so you had a lot more free time, and you didn't really have to answer to any of the, you don't have to answer to anyone else, basically. Bottom line is you'd like to control your own destiny. But where is that destiny taking you in the next 5 or 10 years? I mean, what do you foresee, in terms of what kind of deals are you going to continue doing? I mean, I know that you want to build your small commercial portfolio, but what does that focus look like, and where are you going to be in 10 years if you had just a magic wand that you could wave?
I think in 10 years, what I'd like to be is I'd like to have, 50 to 100 small commercial buildings. My preference, my favorite property type is industrial. Some form or another, industrial is my favorite property type. And then everybody loves multifamily, so multifamily mixed in there. And then maybe a little office, maybe a little retail. Those two can be real capital intensive. The TIs are tenant improvements can be very high on those two product types. So I'm not as big a fan on office and industrial.
Yeah.
I mean, it's going to be office and retail.
And retail, right.
So
right.
I would see myself owning, call it 50 doors or 100 doors. Commercial sphere. I'd still have some residential. Because it's kind of what pays the bills, I'd say. It's the day-to-day rate of bills. I see the market change. I've been in it for a couple of years, and the market's already changed. We found that direct mail turnover isn't as great. We found that it is kind of a technology war right now for the single-family side. It's gotten much more efficient with the REITs that have entered in it, and some of the new companies that have entered into the business. So I see that changing. It's getting even more efficient. And then, there's going to be books along the road. I think the REITs will eventually start dumping all these homes they own.
Yeah, I agree.
That they bought over the last few years. We'll see a different, a different softening in the market in a different way because of it. So I think there'll be a lot of opportunity, even if we don't have the fall that we had in, 7 and 8. I think there'll still be a lot of opportunity and a lot of kind of blips in the road on the way.
Mm-hmm. Yeah, no, I agree with you. So you say smaller industrial properties. What does that mean to you? Because everyone's got a different opinion of what small is, right? And you were mentioning before that you guys, when you were with the bigger group, small to you was 170,000 square foot office park. So give me a good reference point to base it from when you start talking about moving forward. You're going to be looking at smaller industrial properties. Does that mean like 20,000, 40,000 square foot like flex space type properties, or
it's going to be all over the board. I'd probably say if it's probably $2 million and under from an industrial building perspective. It's probably a good number. That'll get smaller. That'll get a smaller flex building. It could be a large, warehouse building.
Gotcha. Okay, good deal.
Yeah.
Well, now I'm going to ask you a tough question, Jared. You've been through the bumps and the bruises and different aspects of this business, both from a finance and an operational side. And knowing what you know today, if you could go back to year one when you were just getting started, obviously you're getting started in the finance side initially, but if you could give yourself some advice after knowing what you've been through today, what would that advice be?
I would say I would get into the ownership side sooner.
Mm-hmm.
So I spent about 10 years on the outside on the finance side. And I just wish I got into the ownership side sooner. I enjoy the bricks and mortar, the touching part of real estate, and the process of its transformation or maximize its value. I enjoyed raising money for people, but at the end of the day, that's all I was doing was finding money for people. So it wasn't as fulfilling. And I'd say if I got into this sooner, I'd be farther along to where I wanted to be.
Mm-hmm. Gotcha. You're not actually out there swinging any hammers or anything like that, are you? Are you involved in the rehab process, or do you guys outsource and contract all that out?
Yeah.
Okay.
I refuse to do any of that stuff. It's not where my time is best.
I agree with you. I agree.
So I don't do any of that. Now, if I'm there, if we have an open house tomorrow or something on a reno, and there's a paint can sitting there, yeah, I'm going to move it. But no, I don't. I do no work.
Okay. Well, let me ask you this, Jared. This is kind of what we call our golden nugget segment of the show. This is kind of how we round things out. This is where I'd like to ask you if you could leave our audience with one last final golden nugget of advice or wisdom that may inspire and motivate them as they progress in their real estate investing career. What would that one last golden nugget be?
That's a good question.
I mean, this could be. I mean, it could literally be just get out there and take action. It could be your maybe some core principles that you live by that you attribute your success to. Anything you want it to be.
For me, it's the biggest thing in every transaction I do. It's got to be a win-win. Mm-hmm. So if I'm buying a house, that everybody needs to win. If I'm selling a house, everybody needs to win. If I'm leasing a property, everyone needs to win. I feel like that if the transaction is that way, I'll end up with a longer-term tenancy. I'll end up with a referral base or whatever. To me, it's got to be a win-win. And if I'm not there, I will flat out tell people if I'm not their best option.
Mm-hmm.
There's plenty of opportunity out there where I can provide a service.
No, I think that's great advice. I mean, this is whether you're doing residential properties, commercial properties, you're big or small, it's still a very, very small industry when you look at it from a micro level. Everyone knows one another, and you've only got one reputation, so you need to uphold that and treat everyone fairly because there's enough money for everyone to make, right? There's enough to go around, so there's no need to be the shyster.
There totally is, and now that I'm on the single family side, I do see that I am working against a headwind of people thinking that that they're shysters.
That's actually the one thing. If I could say that I had, there was one bad taste that was left in my mouth after I got out of that side of the industry. I mean, we own a lot of single family properties here in Florida, and that's all I did from basically 1999 when I first got into this business when I was 19 up until, we were still buying and flipping homes, not flipping, but mostly buying and renovating and holding for long term. We did flip. We did whatever we needed to do, but our main strategy was long-term holds. But we were buying basically up until about 2007. And then obviously everything, all the cards fell down. Yep. But that was the one thing I could just never really get comfortable with. I just feel like there's so much shadiness. There's so many shady characters and shysters and just fly-by-night type guys in the residential side. And I wish there was a way to actually get rid of that. But, the good thing is it kind of there's a self-eliminating process that happens because those guys, they might be in the business. They might do a deal or two or even 10 or 12 or 20 or whatever. But at a certain point, if they keep continuing the way they're continuing, their reputation is going to be so tarnished that they're going to have to leave. They're going to be forced out of the business. So it is self-eliminating.
I've seen it. They jump state.
What's that?
They'll be pushed out of Jersey, and then they'll be in North Carolina.
Right. Yeah, it's self-eliminating, but unfortunately, there's a lot of them. And I think that's the only challenging part. Especially the bigger the market you're in, the more of them there are. And but you got that even in commercial side of things. But I do think it's more prevalent in the residential side, and maybe that's because it's just you get a lot of people that get into this business. You got some people that just they've never been in business before in their entire life, and all of a sudden they see some seminar where they can flip homes and make $10,000, and they don't know the right from wrong, and they get into this thing, and it's they don't really have a good base to start from. They don't have a good moral base to start from, and I think that probably affects a lot of them. But in any event, well, this has been a lot of fun, Jared. I really appreciate you taking the time to share your story with us. Like I had mentioned in the beginning, it's kind of the opposite transition that a lot of people take. I mean, you went from the big leagues, not that you're not in the big leagues now, but I mean, you went from owning ginormous properties, dealing with institutional investors. And it's funny, a lot of people aspire to get to that point. It's not all exciting saying, I mean, I think a lot of people get wrapped up in the idea of saying, like, they get wrapped up in the idea of saying how much they own. Like, I own $1.5 million, or, I've got all these properties, I own these portfolio's, but it doesn't matter. I mean, number one, if you don't have time to spend it. Number two, if you don't have, control at the end of the day, to where you literally are you're just a puppet at a certain point, right? Especially, how you refer to working with groups like GE Capital or those larger institutional financiers. I mean, you don't make the calls at the end of the day. If they've got to sell the property, I mean, they sell the property. You're going to be forced out of it. So that's scary when you think about that.
Another point you said before, I'm also, brochures don't mean anything to me. I've lost more money on stuff that looks good on brochures than the stuff that people want on a brochure.
Yeah, that's a good point. That's a good point.
It's good and functional, I'll take it.
Yeah, that sounds good. Well, Jared, I appreciate this. And, those that are out there, if you have any questions for Jared, or for maybe if you're in the Winston-Salem market or surrounding areas and you'd like to reach out to him and just connect with him, maybe you got a deal you'd like to discuss with him, you can reach him directly. His email address is jrogers@webuyhouses.com. Again, it's jrogers@webuyhouses.com. And, Jared, that's all we have for today, my friend. I appreciate it. I wish you the best in all your endeavors, and you have a wonderful rest of the week.
Thanks, Kevin. You too.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.